Hey guys, this is John, and just kind of wanted to recap Netflix and the earnings trade that we did here on Netflix. And you know, it's always interesting because every stock moves a little bit different, but this has been so textbook. And right now it's about 2 o'clock in the afternoon, so the market's still open. So in this case, you know, the earnings were good. We moved a little bit beyond the expected move. Traded sideways all night during the overnight session when there was volume, when there was this. And then we opened up and just kind of traded sideways to up, and we've been doing that all day. And essentially the strategies are, you know, we set up 3 positions here prior to the earnings release. 2 of them worked out great. One got mangled, and that was fine. But then at the open, we took off the short leg of the mangled one, so it'd have an opportunity to go positive, which it did, and then sold put spreads that expired Friday at the open and at this voodoo line, and then also bought some calls in the money that we'd hold on to over the weekend. Okay, and so this kind of, you know, it's like, all right, hey, this turned into, it's just your basic, you know, this is a basic earnings trade that happens once a quarter, and let's take a look at the results. So if we look at this, we can see that, I mean, this has been essentially a very conservative setup. We've taken no heat on this. You know, we had the 480, 470 put spread. This was from yesterday. You know, that's max profit. We bought 2 of the 540 calls in case this thing went nuts. That's obviously doing great. Okay, and our risk on that was very small. Wish I would have bought 1,000 of them, right? Now, the one that blew up was this one here because we did what's called an iron fly. Well, all we did was followed our earnings checklist and took off the short call to allow this to run because why? It exceeded a specific level, and so we just buy back the short call, let this run, and then it has a chance to go positive. So you can see that the side that we closed out is right here, and that lost, you know, $7,000. Now, this whole position didn't lose $7,000 because you could see that there were, you know, the short put spread, you know, obviously made money, but now it's had a chance to actually go positive. So a losing trade has actually turned positive, okay? Then the first thing we did at the open was sell the 535, 520 put spread, okay? Now at this point, we're pretty much, I mean, it's 2 o'clock, we're pretty close to max profit, so we could let this go. I mean, you know, there's probably a little bit more we could eke out of it. Then we bought the 530 calls, and notice that these expire next week, and there's a very specific reason for that, okay? And these things have now, I guess it looks like they've doubled already today. And then after a pause, we added the next 545, 540 put, okay? And then after the next pause, we added the 550, 542 and a half put, which is the last one we added. So the question now is there anything else to do with this? Well, this is the kind of stuff where it gets me so excited about these earnings trades because it's just kind of like, I mean, it's just like, all right, if it does this, do this. And if it does this, then you do this. And it's just kind of like a checklist that you can follow for each one. So anyway, so this has been a lot of fun here for Netflix. Okay, all in all, a solid day for Netflix earnings. Now the market is closed. You can see we actually got a further push here, a little bit of profit taking in the close. Ultimately, though, I'm looking, if not Friday, then early next week, that we can at least test that tree line at 576. All right, so Netflix, huge, huge, huge earnings winner. And it was a very textbook play. And this is, I'm going to go through step by step on, you know, on the Saturday class, essentially how I played Netflix and how to recognize this pattern in the future so that when you do see something like this, you can go in boldly and with conviction, control your risk, and have a potentially huge trade. Okay, so what's going on for tomorrow? The big news for, well, Friday is, of course, options expiration. And I mean, in addition to Netflix, which we'll be looking at, I mean, there's not a ton of earnings things going on. There's like, you know, a couple of smaller companies that are reporting. A lot of the earnings start in earnest next week, okay, which will be pretty awesome. But for tomorrow, you know, we've got, okay, hey, we're gonna look at kind of managing Netflix, but we've got a lot of stuff like this. For example, you know, Apple doesn't have earnings right now, but they're coming up. And just a quick hint, if you're not sure when they're coming up, all you got to do is look at their options chains, and you can see here that we're obviously having earnings next week because the implied volatility triples from this week. Okay, so next week we're going to be doing Amazon. That'll be kind of the Netflix of next week. But for now, all we're doing is looking at kind of a high open interest type kind of a play. And what I like about this one is that a couple things here. But so when we bought this one, and you can see right now we're actually down on this in the money option. We're down $700, right? But when it spiked up to some resistance levels, we sold the 390 calls, and we're making more money on those 390 calls than we're losing on the 380s. That's just, in a nutshell, the beauty of options right there. And then as a bonus, we've got this put spread so that we've got a theta positive trade. And what that means is that if it trades sideways, that's great, we'll make money. But if it goes higher, we'll make a little bit more because we don't have, it's not completely capped, right? And that's how we've got this set up with the squeeze right here. And then for options that we've been holding for a while, Cyber hit our target this morning. So that was a kind of a feed the ducks to the opportunity. And we're going to look at buying it back on this pullback. In terms of Netflix, we closed out some of those options at the close. A couple ones I kept are these 540 calls that we bought at 380. Right now they're at 22 bucks. So is that a 4 times 6? Let's call it a 5-bagger. And then we had the double earlier on the in-the-money options, which we sold. And then later today, you can see we bought the 550 calls that expired in 15 days. And there is a specific reason for this. Now, they're down right now, but it's because we're looking for a move to 576. And at that point, we could sell calls against it, okay? So this is, so what I call, the earnings strategy is there's a period of time before earnings, day of earnings, and period of time after earnings. And this encompasses the period of time after earnings strategy. Okay, so we're going to be going through all this stuff in detail for the earnings class on Saturday. So everything that you saw that happened today live with Netflix, I'm going to go through step by step on the Saturday class, which is this upcoming Saturday. And that is just $297, okay? Now, if you want to see me do like a Netflix type trade live on Facebook, I'm going to be doing this live on the 22nd, the afternoon of, where we can set it up. And then also the morning of the 23rd, so I can manage it. So you'll know exactly what to do, okay? So it's going to be an awesome class. Completely looking forward to it. simpleroptions.com/earnings class, all right? And looking forward to seeing you on Saturday so I can share essentially this cumulative 2 decades worth of earnings knowledge with you on the stuff that I've found that works, all right? Have a good night and see you then.